What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Alex Brazier, the Deputy Head of the BlackRock Investment Institute. And this week, I'll be discussing how we make sense of this year's flip-flopping market narratives. Today's new volatile regime means the dominant market narrative can flip repeatedly. And that's exactly what's been happening this year. For example, stock gains at the start of 2023 were wiped out by the March bank turmoil that revived recession fears. Stocks then rallied through July as inflation fell. But then bond yields jumped and stocks stalled in August as markets focused on growth apparently holding up well in the third quarter. The dominant narrative could yet flip again. We think a key part of the story has actually gone under the radar. Averaging US growth measures, the economy has already stagnated for 18 months as rate hikes and restricted credit have taken hold. Outright recession has so far been avoided thanks to consumers spending their pandemic savings. But with those savings now nearly exhausted, next year could bring lower growth too. And that would mean the weakest 2.5 years for the US economy outside the global financial crisis. How has this weak growth gone under the radar? We think it's partly due to strong job growth, not something you'd normally expect to see in a period of economic stagnation. But jobs have been created because employers are still catching up with the restart of economic activity after the pandemic shutdowns. Adjusting for that, job growth's actually been quite weak. And with that job catch-up process now nearly complete, employment growth is slowing. So it's possible that the market narrative shifts again as stagnation sinks in. Take Europe, for example. As growth there has more obviously weakened, the early outperformance of European stocks this year has fizzled out. And the European Central Bank may pause its sharp rate hikes this week, in our view. More broadly, all of these market narratives apply a business cycle lens to developments. But we think the core issue is actually structural. The labour force is growing more slowly than it used to as the population ages. And so weak growth isn't translating into high unemployment like it used to. We're experiencing what you might call full employment stagnation. Over the longer term, these worker shortages mean inflation can be kept low only with weaker growth than in the past. So we could be in for a roller coaster inflation journey. Inflation is now set to fall further as the pandemic mismatches between demand and supply sort themselves out. Goods prices are coming off their highs, job vacancies are no longer going unfilled, and so wage growth's coming down. But as labour shortages start to bind in future, inflation pressures could build again. So we see major central banks compelled to hold policy tight. Structurally, this is a new regime. Here's our market take. The new regime is playing out. Markets can run with a narrative for a while before flipping, creating alpha opportunities for those who can adapt quickly and time the market shifts. On a 6 to 12 month horizon, we stay underweight the broad market of developed market equities. But on that same horizon, we look to harness some of the mega forces like artificial intelligence to tap the structural drivers that are shaping returns now and in the future. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thanks for tuning in. If you've enjoyed this episode, please subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.